Yo, what's up guys? It's your boy Looney. Big news today, Nvidia just reported earnings after hours, and even though the numbers came in strong, the stock actually dropped and the whole market is red. I want to break down what happened and how I adjusted my portfolio to this news. But before we get into this video, I want to do a quick shout out to the Discord. It is free to join, and then I also offer a premium membership which gives you access to one-on-one coaching, trade callouts. I have an option selling course, I do giveaways and more. You can check it out. The links to that are in the description. So let's actually pull up Nvidia now, and you can see here after hours it is down 3%, and Nvidia actually delivered massive revenue growth with 56% year over year, and also coming in at 46 billion, which actually beat expectations. Additionally, earnings per share also crushed estimates. So normally you would think that the stock would actually rip, but instead it dropped around 3% after hours. So if we look down here, you can see that it beat earnings, and year over year growth, it is performing well, but there's obviously some concern, and it didn't have good guidance is the big issue. The big concern is actually China. A big chunk of Nvidia's data center revenue relies on China chip sales. And with the restrictions and uncertainty there, Wall Street actually wasn't impressed. On top of that, their guidance was a bit cautious, which added pressure. So again, there's a bunch of news articles where you could see that Nvidia didn't include China in its outlook, which is pretty concerning. And overall, this is, I wouldn't say expected, but this does happen. A strong company with good fundamentals beats earnings and doesn't actually perform well, or the price action doesn't perform well. And it could just be that the stock is a bit overvalued and it's a healthy pullback, but it does put in perspective on how big companies can still actually perform bad in the market. But how did I handle the situation? Because although I don't own Nvidia and I don't trade Nvidia and I didn't trade this earnings, I do feel as though I was affected by this earnings. And what I did is I de-risked. So if you could see here, I have a lot of buying power now, or a big percentage of my portfolio is buying power or cash. And that's because I actually took money out of a bunch of ETFs and stocks, and I don't own as many. I'm less diversified. And the reason for that is because one, I was profitable and I wanted to get some profits with that and possibly reinvest. I also knew that September is sort of a low volume and a pretty volatile time in the seasonality of markets. So that was that reason. Additionally, I also wanted to be less diversified. If we're being honest, I owned a little bit too many shares, and I was sort of getting overlapping of industries and just overall companies. And by de-risking and just overall selling off those shares, I have that peace of mind. And now I could focus on what I think is a good investment. And although I'm not investing anything now, I am waiting for that opportunity, because I do feel as though we're in sort of, I wouldn't say a bubble, but I do feel we're a little overvalued, and taking some profits isn't a bad idea. And now that I've de-risked with stocks and ETFs, I could actually hold crypto and the more risky plays and hold those as my long plays or my bullish hedge, where my bearish hedge is holding cash. I have covered calls. The covered calls are a hedge to the downside, although they don't fully hedge, they are a hedge. And overall, I think I'm in a good spot. I could use that cash for better opportunities. I wouldn't say volatility is back. I wouldn't say we are turning bearish, but VIX is slightly up today. It is still under that $15. And like I said, September is usually a time of bad returns. And we're gonna be looking at the interest rate announcement, whether we cut or not. If we don't cut, there probably will be some downturn. And even if we do cut, there is a chance of the market further dipping, because this could already be priced in, and overall initial reactions could be bad. And that's why I think holding cash for myself is one of the best plays I could do right now. So instead of panicking and just panic selling, I'm going to use these dips very strategic to invest. I still have my options, and I didn't make any trades today. I just sat on my hands, just simply hold, let the market play off, and let patience just do its thing. So here's my takeaway. Earnings are tricky. Sometimes the fundamentals do look great, but the market cares more about guidance and overall risk. So right now, Nvidia is still a beast long term, but near term, uncertainty in China and just slowing data center momentum are red flags. So that's why I'd rather stay cash than to be all in. And I'm being very selective with my option trades and just overall ready for those dips. But you can see my portfolio is sitting at 60,000. I'm not chasing here. I'm using cash as a weapon. And in this environment, having some on the side is just important as the stocks you own. Until next time, peace.